Hello and welcome back to our final demo video. In this video, we're going to cover problem 16-3B. This problem that we're going to go over should coincide with your homework problem 16-3A. The B problems are up. They're posted in Blackboard. Strongly encourage you to have those open, whether you print them up, have them open on your screen. Just make sure you follow along. You'll be fine. Okay, so on December 31st, 2016, Bly Associates owned the following securities held as long-term investments: Coleridge Company, Korea Company, and Sterling Motors Company. Okay, first of all, some things we got to pull out of here or some things I need to remind you of, or we need to be reminded of rather. Number one, what type of securities are these? Well, they're investments. Are they debt or equity investments? Well, they're common stock. Notice how they're held, right? Held as a long-term investment, meaning the company isn't going to sell these quickly. The company isn't going to hold these for available for sale. The company's going to hold on to these for the long term, right? Why? Well, maybe to get some dividends, things like that, okay? Or some dividend income. Now, that's number one. Number two, we need to think, okay, how do we record these, right? How much stock do we own? Well, the fact is that they give us the fair value. So that means that these things aren't, or these securities, these securities that we own, we could assume that they are not that there's not a substantial amount here, right? So what we need to do is journalize the 27 transactions. We need to post them to the stock investment. We're going to use a T account, okay? We need to prepare adjusting entries on December 31st, 2017 to show the fair value. And then we need to present these things in the balance sheet, okay? So let's just go ahead and pretty much just get started, right? July 1st, what happens? Received $1 share semi-annual cash dividends on Cora Company common stock, okay? Excuse me. So these are our stock investments. These are long-term. We have to report them as equity or within the equity section of the balance sheet. So keep that in mind as we go through this, right? So first thing we got to do is journal all the transactions, right? So I'm going to put an A here, and we're going to say on July 171, and this is what year? 2016, okay? All right. So what happened? Well, we received $1 per share cash dividend from Cora Company. Super easy, right? What we need to do is we need to debit our cash for how much? Well, how many shares of Cora Company do we own? Well, we own 5,000 shares, okay? So I'm going to take my 5,000 times $1, and that gives us $5,000, right? So that's the cash that we received, 5,000. Okay. What did we get here? Well, we got dividend revenue, right? Of how much? 5,000. So what's the explanation? Well, excuse me, I'm going to say div received, Cora, or Korea, however you pronounce that, $1 on 5,000 shares, right? Okay. On August 1st, 2016, what happened? Well, we received 50 cents per share on dividends on Woolridge Company common stock. Okay. Journal entry simple, right? Debit cash, credit dividend revenue. Cash, how much? Well, I got 50 cents on each share I own. So how many shares do I own of Woolridge? Well, I own 4,000 times the 50 cents. $2,000. I need to credit dividend revenue for the same amount. Okay. Again, what do I want to put here? Well, just say what happened, right? Dividend received, 50 cents on 4,000 shares of Woolridge. Okay. Now on September 1st, so 9/1/2006. 9/1/2016. What happened? Well, sold 1,500 shares of Coria Company common stock for cash at $7 per share. Okay, so that's easy, right? What did we do? Well, we sold stock. Okay. So first thing I'm going to do is debit cash, right? For how much? Well, we sold 1,500 shares at $7 a pop. The cash that we received is $10,500. Okay. Now, I need to show that my stock decreased. Okay, so I'm going to credit stock investment for the number of shares I sold, 1,500, times what was my cost, right? Well, to figure that out, I need to go back to my the problem, and they tell us that we bought 5,000 shares originally, and that cost us $30,000. So if we divide the shares and the cost, that'll tell us what our per unit cost was. Well, that's $6. Okay. So we run the numbers. We see that the cost of the 1,500 shares that we sold was $9,000. Oh, put my 6 there. Sorry about that. Okay. So do we have a gain or loss? Oh, we have a gain on stock, right? So I'm going to credit my account gain on sell stock investment for $1,500. Okay. What did we do here? Well, I'm just going to put in the parenthesis or put in the explanation, sold 1,500 shares Cora. Okay. Now think about this. I sold 1,500 shares, right? How many did I originally have? Excuse me. Sorry about that. I had originally 5,000 shares. I sold 1,500. That means I have 3,500 shares left. Okay. That's important information that I'm going to need to know at some point in time, probably, right? So I'm going to go ahead and say 3,500 shares left. Okay. Just trying to keep track. If you guys had the opportunity to watch the videos last week on our for our calls, I made a suggestion of keeping a T account with the number of shares that we have, right? So you could do that, or you could just put your notes here and just keep track of it that way. Either way is fine. There's really no right or wrong answer. Whatever works best for you. At the end of the day, as long as you have the right number of shares, I don't care how you do it. Okay. Now, they do want us to also prepare, they want us to use the T account, right, for the stock investment account. So I'm going to do that right now. And I'm going to do that as we're going along. Okay. So I'm going to come over here. I'm just going to create my T account, right? Super easy. This is stock investment. account. Okay, it's an asset, obviously. Oh, wrong one. There we go. Okay, so the beginning balance is 190,000, right? You might be saying, how did you get that? Well, it's easy. I went to the problem and I added up the cost of 100,000 for Woolridge, the cost of Coria, 30,000, and the cost of Sterling Motor, 60,000. That's how I got the balance of 190. Okay. Now, on September 1st, this journal entry we did, we credited this account, investment on stock, for 9,000. Okay. I'm going to keep track of that. Okay. So let's go to our next investment, or our next journal entry, excuse me. October 1st, sold 600 shares of Woolridge Company stock for cash at $30 per share. Easy peasy, right? We do this basically the same exact thing we just did. 10/1/2016. What are we getting? We're getting cash. How much cash are we getting? Well, got to figure that out, right? I'm selling 600 shares times, problem tells us it's $30 per share. And that gives us, if my math is correct, $15,000. Or I'm sorry, 18,000, sorry. $18,000. Okay. Now I need to figure out how much am I decreasing this stock investment by. So I need to credit stock investment for how much? Well, I'm selling 600 shares. 600 shares times the cost. Well, what's the cost per share? Well, think about it. How many shares do I have? 400,000 shares, 4,000 shares, right? At what cost? Well, I originally bought all 4,000 shares for $100,000. If I divide those two, I see that the price per share was $25 when I bought it. So I'm going to credit stock investment for $15,000. I have a gain, right? So I need to credit my gain on sale of stock investments for the difference, which will be $3,000. Okay. Again, what do I want to put here in my explanation? Well, I'm just going to say what I did, right? Sold 600 shares of Woolridge, right? And if I had 4,000, I now have, if I had 4,000 and I sold 600, that should give me 3,200 shares of this stock left, right? 3,200 shares remaining. Okay. And then I need to post this stock investment, this journal entry to that account. So I'm going to credit 15,000 and I'm just going to post that. Okay. We're not posting all the other stuff. The problem just said, just post the stock investment account. That's easy. Okay. On November 1st, received $1 per share cash dividend of Sterling Company common stock. Okay. That's easy for us to do, right? 11/1/2016. We're getting cash. How much cash are we getting? Well, we're getting $1. On how many shares of Sterling stock do we own? Well, if we look at the problem, we say, excuse me, we see that we own 3,000 shares. Okay. So that should be $3,000. And then since we received the dividend, what do we have? Well, we have dividend revenue for the same amount, $3,000. Okay. And then if you want, you could just, in the explanation, received $1 dividend. Okay. On December 15th, December 15th, we received 50 cents per share cash dividend on Woolridge common stock. Okay. Guess what? Previously, we sold Woolridge common stock. We need to know how many shares outstanding or how many shares we have left after that sale as of December 15th. How many shares of Woolridge stock do we have? Well, that's pretty easy, right? It's easy because we already calculated, right? Oh, and my math was wrong. It should be 34. 3,400, not 3,200. Okay, so cash, because we're getting cash, 3,400 shares times 50 cents gives me $1,700, and I need to credit dividend revenue. So again, you always want to ask yourself, how many shares do I have left, right? You can't go to the problem and say, oh, I have 4,000 and do 4,000 times 50 cents. That would be wrong, right? Why? Because we got to keep chronological order of everything that happens, okay? We had 4,000, but on October 1st, we sold 600 shares. That leaves us with 3,400. When that dividend payment or declaration of a dividend rolls around on 12/15, we need to know that, oh, we only have 3,400 shares. We don't have 4,000 anymore, okay? Very important that we keep track of the number of shares. Okay, what else we got? The last one we have is we got a dollar per share semi-annual cash dividend for Cora Company common stock. Well, that's easy, right? 12/31/2016. Excuse me. Cash is going to be credited for how much? Well, how many shares do we have outstanding, right? Well, think about it. We're talking about Cora, right? We started off per the book problem of 5,000, but then don't forget, we sold, right? We sold Cora on September. So that means we have 3,500 shares left. Okay, see how easy that was, how I put that right there included that in the explanation, so it makes it easier for me to do other journal entries, right? So the cash was, Cora paid us $1. So we're going to take the number of shares, 3,500 times $1. That gives us $3,500. Okay. The next thing we need to do is credit our dividend revenue for how much? 3,500. And that, my friends, is part A. Oh, nope. Got to finish one more thing. We need to calculate what the ending balance of the stock dividends are, or the stock investment is, right? So I'm going to add my debit, subtract out my credits, and I get $166,000. That is the value at the end of the year of my stock investment account. Remember, that's cost, okay? Part B tells us that prepare the adjusting entries December 31st, 2017 to show securities at fair value. The stock should be classified as available for sale, okay? So for this one, right, we need to know what is the value, right? So if we read the problem, they tell us that December 31st, the fair values for common stock are Woolridge, $23, Cora, $7, excuse me, and Sterling Motors, $19. Okay, so I'm going to come down here and I'm going to hit C. And I'm going to do a little calculation. Okay, so first thing we need to do is list our stocks, right? So I'm just going to put a W for Woolridge, sorry. I'm going to put a C. I'm going to put a C for Cora, and I'm going to put an S for Sterling, okay? I also want to include the number of shares that we own for each of these, and I'll show you why in a second. So for Cora, we have 3,500. For Woolridge, we have 3,400. And for Sterling, we have 3,000 because we didn't sell any Sterling, right? Okay. Now I need to figure out what's the cost, right? So these are the shares. These are the cost. Okay. Well, I know, and I remember from the journal entries, we calculated the cost, right? We said this for when we sold Cora. I'm going to that journal entry, right? We already calculated that it was $6 per share. Okay, so I'm going to put in my 6. Same thing with, oh, sorry, that was Cora. For Woolridge, when we sold Woolridge stock, and I just need to find it here, bear with me, right here, right? We knew that the cost originally was $25 per share, right? How did I get that? 4,000 shares, cost 100,000, $25 per share. That's the original cost. And then for Sterling, we really didn't calculate that out, right? But we had original cost of $60,000. $60,000 was our original cost divided by the 3,000 shares. Oh, other way. 3,000 divided by 60. $20 per share. Okay. So I'm going to plug that in here, right? $20. Okay. So now I want to figure out the total cost. Well, that's easy. All I do is just multiply, right? Number of shares that I have for Wilcox, $34, or Woolridge. Sorry, I've been watching too many movies. 34,000 for Woolridge times $25 per share. Same thing for Cora, 35,000 share or 3,500 shares times $6 per share. And for Sterling, I have a cost of 60,000 per share. All right. Now, I apologize. You hear my dogs go nuts. I get a total of $166,000. Okay, that's my cost, right? That's right. I know that's right because look, I already did the T account up here. 166,000. That's my total cost. Okay. Now I need to figure out what the fair value is. Okay. Fair value. Well, we have to calculate that because they tell us in the problem that Woolridge has a fair value of $23. Cora has a fair value of $7, and Sterling $19. So what I'm going to do now is multiply the number of shares that I have, 34,000, times that fair market value, $23. And I'm going to do that all the way down. Darn it. You know what? I'll just run the numbers. It's probably easier to do it that way. 3,000 times the fair value, 19. So I see now what my total fair value is. 59,970. Or yeah, $159,700. Okay? So that's my cost and my fair value, right? C wants us to do the journal entry, right? So we already did our calculation. And what we need to do is recognize the investment, okay? So we need to make our journal entry to make sure that we have fair value. So what I'm going to do first is I'm going to credit investments in stock. And I'm going to say less than 20% owned at fair value. Okay. And that is going to, we're going to show that that is going to be the $159,700. Okay. Oh, bear with me here. I jumped the gun. I apologize. We forgot to do our journal entry to do the adjusting entries. So I'm just inserting some cells just to make sure I have enough room to work. And it looks like we do. Okay. You stink. All right, here we go. Okay, so for the journal entry, because this is still part B, I jumped to C too soon. We need to do the adjusting entry. So 12/31/2016. What do we have here? Well, we have an unrealized gain or loss, right? Is this equity or is this income? In other words, should this be recorded on the equity, the income statement, or on the balance sheet? Well, to answer that question, we need to think back. How are we categorizing these? What's management's intent? Management intended to hold these for long term. These are long-term investments. So we need to report them as equity, okay? The amount, well, we have our cost of $166,000 minus our fair value, which is $159,700. We get $6,300. So we have an unrealized gain. There we go. Okay. So now we need to credit, right? What am I crediting here? Well, how did we record these assets? Or what are these categorized as, right? Long-term investments, okay? So since these are categorized as long-term investments, we need to have, the count we need to use is fair value adjustment. And again, these are, I'm just going to say LT, long-term, $6,300. Okay? So now we get to part C. Part C, and that one was B. Okay. We get to part C. Part C says, show the balance. Okay. Show the balance sheet presentation. Accounts at December 31st, 2017. At this date, Bly Associates has a common stock account that's worth $2 million. They got retained earnings that's worth $1.2 million. So the first thing we need to do is show the investment section, which we just did here, which should be $159,700. Okay. Now we need to show the stockholders' equity section. Okay, so what's the title? Well, the title here is, this is the balance sheet, but what section are we in? The section title is shareholders' equity. I need to credit common stock. For how much? Well, the problem already told us, that we have $2 million. Okay, what's the retained earnings? Well, the problem already told us that retained earnings is $1.2 million. Okay, so what's our total, total paid in capital and retained earnings? And I'm just going to abbreviate here, total paid in capital and retained earnings. Well, we're just going to add these up. We're going to add up common stock retained earnings, right? Because we want to report the total of this section. Well, that's $3.2 million. Now we need to account for that unrealized loss, right? So we're going to subtract less unrealized loss, okay? And that amount is going to be the $6,300. So we now have total stockholders' equity the $3.2 million minus the unrealized loss of $6,300, we get $3,193,700. And that, my friends, is how you do exercise problem 16-3B, which a lot of the journal entries, the logic that we went through, the process that we went through, it's going to be pretty much identical to your homework problems. Nevertheless, if you have any issues, you know how to get a hold of me. Be more than happy to help you out. So thanks for tuning in, and we'll see you guys on Tuesday. Tuesday when we have our call and to answer any questions that you might have. All right. So thanks for tuning in, and we'll see you next week.